Hey, welcome back. As always, Hunter here, and I want to start off and talk about something serious. If you've been sleeping on gold and silver, it's time to wake up because the numbers tell a story that Wall Street doesn't want you to hear. Let's talk real performance over the last 30 years. We're going back to the mid 1990s and tracking exactly what happened when you put your money into gold, silver, stocks, real estate, and even crypto. The numbers don't lie. 30-year performance. Gold has crushed it. From 2000 to 2025, gold jumped from $289 per ounce to over $4,479. That's a 1,450% increase average annual return, 10.9% per year consistently over 25 years. In 2025 alone, gold surged 67%, its best year since 1979. From 2000 to 2011, during one of the worst economic periods, gold gained 660% total. But here's where it gets really interesting. Silver. Silver has been the beast in this race. From 1999 to 2011, silver exploded 1,126%, while gold only did 660%. In 2025, silver gained an absolutely insane 142%, nearly doubling Bitcoin's performance. Silver hit a record high of $54.47 in October of 2025, and many experts see $100 plus coming in 2026. Let's compare gold to everything else people said would make you wealthy. Real estate averaged 4.3% annually, less than half of gold's 10.9%. Or real estate had a total return of 8.78% over 30 years. Gold 10.29% annualized, consistently beating property. And during the 2000 to 2013 period, the S&P 500 needed 13 years just to get back to its 2000 peak. Meanwhile, gold was making new highs year after year. Or in 2008, when stocks tanked 57%, gold actually gained 25% of gold's best years, averaged 28.8% gains. Higher than stocks' 20.5% gold has outperformed the traditional 60-40 portfolio. While bonds struggled with low interest rates, gold kept climbing. Gold is the only asset that truly protects against inflation and currency debasement. Bitcoin only exists since 2009, no 30-year track record. When you need stability, Bitcoin is down 30% from its peak, while gold hits new records. In December 2025, gold hit $4,524 and silver hit $72, but Bitcoin was down 8% for the year. Bitcoin is 3 times more volatile than gold. Great for speculation, terrible for wealth preservation. Silver, the most undervalued asset on earth. Here's where the real opportunity is hiding. Silver is screaming, buy me, and here's why. The supply crisis is real. Silver has been in a supply deficit for 5 consecutive years. From 2021 to 2025, the cumulative deficit was 820 million ounces. That's an entire year of global production gone. Mine supply has declined 7% since 2016, while demand keeps exploding. 2025 deficit 95 million ounces, and experts say this continues for years. Industrial demand is off the charts. 59% of all silver goes to industrial uses. It's not just an investment, it's essential. Solar panels alone are consuming silver at a 12.6% annual growth rate. EVs use 2 to 3 times more silver than gas cars. And EV production is skyrocketing. 5G infrastructure, AI data centers, electronics, all need silver. Industrial demand hit a record 680.5 million ounces in 2025. The gold to silver ratio screams. Undervalued. Historical average, 69 to 1. 69 ounces of silver equals 1 ounce of gold. Today's ratio, 79 to 1 to 81 to 1 silver, is produced at a 1 to 7.5 ratio to gold. But priced at 1 to 81, that's a massive disparity. When this ratio corrects, silver will explode higher. Metals Focus predicts over $500 per ounce by 2027 major institutions, over $1,000 an ounce over 12 to 24 months, many seeing $200 within the year. Bank of America on gold, $5,000 per ounce target. Some analysts project silver could hit $1,200 when the supply squeeze really hits. The setup is perfect right now. Why are gold and silver both undervalued with massive upside? 1. Central banks are hoarding gold. Central banks bought 980 tons in Q3 2025 alone, 50% higher than previous quarters. China added gold for 14 consecutive months. In 2025, global central banks hold over 36,000 tons, and they're buying more too. The dollar is weakening. U.S. dollar index down over 6% in 2025, worst year since 2017. Record government debt levels make gold more attractive. Stagflation fears are real, and gold thrives in stagflation 3. Investment demand is surging. Gold ETF inflows hit $26 billion in Q3 2025. Silver ETF inflows reached 95 million ounces in first half of 2025. Physical silver is getting locked up in the wrong locations due to tariff concerns. 4. The silver squeeze is building. Freely traded. Silver inventories are being drained. Since 2019, over 1.1 billion ounces have been pulled from available inventory. Any demand spike could send prices vertical to bottom line over 30 years. Gold has proven itself as the ultimate store of value, averaging 10.9% annually and protecting wealth through multiple crashes, crises, and currency crises. Silver has been even better during bull cycles, with gains exceeding 1,000% from 1999 to 2011. And here's the kicker. Both are still undervalued. Gold at $4,950 with $5,000 to $10,000 targets. Silver at $100 an ounce with $500 prediction for 2026. Supply deficits continuing for years. Industrial demand that's non-negotiable. Central banks buying at record levels. You missed Bitcoin at $1. You missed Apple at $5. Don't miss gold and silver when they're still in the early innings of this bull market. The data is clear. The fundamentals are solid. The opportunity is now. That's not hype. That's 30 years of proven performance. And the next 5 years could be even better.